Hey guys, my name is Jonathan Reich. I'm a licensed CPA in the state of Louisiana, and today I want to talk about one of the less sexy things that you can do in accounting, a very technically complex topic, which is accrual versus cash accounting. And primarily today, we're going to focus on the cash accounting methodology, which if you're an accountant or a bookkeeper or a CPA, you're going to know that that is really an improper way to record your books, that it's not GAAP compliant. But we need to talk about it a little bit so we can kind of understand what it's doing for us, why small business owners often fall into the trap of using cash basis of accounting, and then the limited use cases where it might be beneficial. So first, let's talk about what accrual accounting is. Accrual accounting is a methodology of accounting that recognizes income and expenses over time. And so that's going to give you a smoothed over version of your profit and loss. It's also going to generate a more accurate balance sheet by loading prepaid expenses, accounts receivable, accounts payable, things like that. So the accrual basis of accounting is what you want if you're going to turn over your financials. They're GAAP compliant, and it's what most accountants, most business owners are going to expect to see. On the other hand, today's topic, the cash basis of accounting. The cash basis of accounting is what a lot of small business owners fall into the trap of because they're not experienced accountants. We can't expect them to understand the difference between these methodologies because they don't have a 4-year degree, they don't have a master's in accounting, they haven't sat and taken the CPA exam and studied for that for 15 months. They just don't know, and that's not their fault. And it also just kind of comes natural to a small business owner because it's what makes sense. And so the cash basis of accounting is what comes in and out of my bank account, when it comes in, when it comes out. That's when I'm going to recognize the expense or the income. That's really just not a great way of looking at things. I'll give you a good example. Let's say I have a single client that I'm working with, and I've got an agreement with this client. I'm going to do a pretty good sized project that's going to take up all my employee time, and I expect it to take 3 months. If I'm running on the cash basis of accounting, I'm going to have 3 months of expenses for this project. Maybe it's $1 million project. I'm going to have all the labor, all the payroll expenses associated with that project. I'm going to have my rent, my lights, my utility, my insurance, my cleaning fees, anything that comes out of my business bank account to run that business. I'm going to have 3 months of expenses and have no income to show to offset that. So it's going to look like I had a terrible first 3 months of the year. And then in month 4, when I send that big invoice to pay for all that, it's going to be lopsided. It's going to look like I made $1 billion in April, and then I had a loss January through March. And that's what the cash basis of accounting is whenever that money comes into the bank account on that 4th month after the project is complete, that's when I recognize that revenue, and it's wrong. You need to do accrual accounting and space it out as you work on the project, recognize the revenue even though the client hasn't paid yet. And the reason that makes sense for most small business owners is because they're thinking about the day-to-day on running their business. They're going to say, oh, I got paid for this. It was $1 million. That's $1 million of sales that I need to recognize. But what they may not realize is they actually finished that job for that client a month and a half ago, and it took 45 days for that client to pay. God forbid, if the client's late 90, 120 days, 3 or 4 months after the fact, you have forgotten what a lot of the expenses associated with that are. You're going to have a really good month 3 or 4 months after the fact because you're recognizing that revenue when it comes in. And you may not have accurate expenses associated with that project. And project-based accounting is a whole other thing. But basically, most businesses run on like a monthly 30-day cycle. You need to do accrual-based accounting, so at the end of the month, any outstanding invoices are basically expenses associated with that month. Any invoices you can send out to your customers because you did things for them needs to be associated with that month, and that's going to be accrual-basis accounting. And so a lot of times, business owners just don't know the difference, and it's not their fault. All right, so let's talk about when cash basis of accounting may be useful. I'm not saying that you should do cash basis of accounting at all. Remember that. If you want to send your financials out to someone else to look at them and try and secure a loan, don't do that. Make sure they're accrual basis and GAAP compliant. If you're trying to show your your financials to an investor or someone like that, make sure that you're not like only painting half the picture. But when cash basis might be useful is whenever you're really watching your cash flow. If you're a pretty small business and you don't have a ton of inventory or no inventory, and basically you are the business to where like if I'm a lawyer and I'm the only employee of my business, I'm going to bill when my services are complete. Okay, that kind of makes some sense because you're not going to have a ton of like inventory associated with that. And so that's one of the few cases, like really, really small businesses. If you're like really watching cash flow because you don't have a lot of working capital to basically float the business because you're not getting invoices paid in 60 days, you're getting them paid in 5 days, for instance, stuff like that. Another like less common because it's even more technically complex than cash versus accrual is for tax basis. And so if your business has made less than $25 million over the last 3 years, you can use the cash basis for tax reporting. But if your business, balloons and you're making more money than that, you're probably going to have an accountant who's going to be able to kind of walk you through this. But cash basis can defer taxes until the actual cash is received, whereas the accrual basis, like if I send an invoice in December, that is revenue in December, but if I don't receive the funds until January, I'm filing on a tax basis, then I wouldn't need to pay those taxes until the following year. So once again, I'm baking in a complex topic in here. And that's really going to be it. Maybe some ease of use, but we really don't want to do cash basis, guys. It's just not right. So let's talk about a good accounting software that can help you not fall into those traps. So Puzzle is one of the many accounting softwares that allow accrual basis. Honestly, if your software doesn't allow accrual-based accounting, you probably don't have a legitimate accounting software. Like any accounting software worth its salt is going to be able to do accrual accounting. And so primarily what I want to talk about today with Puzzle is it has the option to do both. So if I've loaded up all my revenue and I've loaded up all my expenses and I've completed my bank and credit card transactions, so everything's reconciled and loaded, and I want to see how I did for the month and everything's been entered correctly in the module, I can jump over to my dashboard here and actually flip between accrual and cash basis. And there's only really been one instance where I've used this option with a client because cash basis, once again, is not very accurate. You can come down here, pull whichever report you want. Typically a profit and loss is the one that most small business owners are going to understand, and select that cash basis of accounting. And so the only time that I have found this to be useful is whenever a client comes to me and says, man, I just feel like we're really struggling to pay our bills. You're showing a lot of profit this month, but I don't feel like that money's in my pocket. I'm really having to stretch. I'm having to draw off my line of credit. Like, kind of tell me what's going on. And so I explained to them, you had an excellent month last month. You made $1 million, but you're not going to see that $1 million for 45 days. And so you are having to pay your labor, your payroll, any expenses that are due now from that line of credit. But whenever you get paid 45 days from now, it's going to be a lot easier. And so your cash basis of accounting, which is what I'll pull up and show that profit and loss, there's going to be a big fat negative there. It's going to be like negative $300,000 because you're having to send all this money out the bank account and you haven't received any funds. And then we'll flip it back over to the accrual basis of accounting, which shows the invoices we've sent but not yet have been paid on. And it might be $1.5 million positive because we're just waiting on that income from those customers. And so that's really the only time I have found the cash basis of accounting reports to be something that can be used within any accounting module, not just Puzzle, like QuickBooks or Xero. Same for the balance sheet. If you're running on a cash basis, you're really not going to have an accurate balance sheet. It's going to be missing things like accounts receivable, accounts payable, prepaid expenses, depreciation expense. None of that's going to be on your balance sheet if you're running a cash basis. And so it's super important to make sure you can run an accrual basis and accurately capture those expenses, which Puzzle does have the option to toggle against. But really, guys, try and shy away from that cash basis of accounting. If you really don't understand the difference, you need to probably hire someone who does. Otherwise, you're not going to have a full big picture of the health of your business. And if you don't understand what's going on behind the scenes of your own business, you can't make key decisions to help run a successful business. And the last thing anyone wants to do is run their business into the ground, especially when it's such an easy thing to fix by hiring a bookkeeper or hiring an accountant. So make sure to pick a good accounting software. Make sure you understand the difference between accrual and cash basis of accounting, and then make sure you have someone who can enter these things correctly and can explain the difference between cash and accrual if you don't understand it by the end of this video, which you probably won't. And then run your business with a long-term outlook, which is what accrual accounting does, instead of the day-to-day, which is how a lot of people fall into the cash basis of accounting trap. So anyway, guys, thanks for watching. I appreciate it. I know this is a technical and boring topic, but picking a good accounting software that can kind of toggle between the two in those limited use cases could be super important. So anyway, thanks for watching.